Good morning from Chicago. It is 8:01 a.m. Chicago time on Monday, the 2nd of February, 2015. Thanks for joining me. Derivatives trading involves substantial risk of loss, is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quick rundown of the news. Overnight, key element is the China manufacturing PMI. Official and HSBC register contractions for the first time in a couple of years. January PMI manufacturing official saw its first contraction since September 2012, 49.8 versus 50.3 expected, while final HSBC registered its second consecutive month of contraction at 49.7 versus 49.8 expected. So that's interesting for us. We'll see how that plays out. We've known that China has been slowing down for quite some time now. Greece's new government hints that an individual compromise is to be reached with the EU on its bailout following a tough initial line of negotiations. So this new president came out punching, but is now in negotiations with the EU regarding Greece's debt. He's got nowhere to go. And this one is important to note, those trading US, Swiss, or Euro Swiss pairs. The S&P said to have initiated a soft floor for Euro Swiss between 105 and 110. Remember, it was held at 120 and was released 2 weeks ago, or a week and a half ago on Thursday or Wednesday. Now, I guess there's a soft floor at 1.05 versus or to 110. The other item I have is the United Steelworkers Union issued notices of a potential strike action yesterday at 9 U.S. refineries as current contract expires this weekend. United Steelworkers represents workers at 65 fuel-making plants around the U.S., accounting for nearly 2/3 of the country's refining capacity. Some are saying this caused a spike in crude oil on Friday. However, the spike corresponds more with the Baker Hughes rig count, showing that as much as 90 refineries are now offline, or rigs are offline. And so the expectation is for less supply. And so the reaction, hence the reaction in crude oil, seems like a temporary thing. December personal income came in at 0.3 versus 0.2 estimated. Personal spending negative 3.3 versus negative 0.2. December PCE deflator for the U.S. Month on month came in at negative 0.2 versus negative 0.3. Year on year 0.7 versus 0.8%. And then finally, geopolitical, reportedly the U.S. may begin providing Ukraine with up to $3 billion of military aid. The Ukraine has some rundown MiG-29s are again under attack as they try to keep out of the hands of the Russians. This morning, looking ahead, 8:45, just 15 minutes after the open, we have January final market manufacturing PMI expecting 53.7. At 9 Central, December construction spending expecting 0.7% estimated. And then at the same time, ISM manufacturing, which is the key figure here, also at 9 Central, at 54.5. Estimated. Prices paid 39.8 estimated. At 10:30, the Treasury is to sell 52 billion in 3- and 6-month bills. And then tonight at 9:30 Central, 10:30 Eastern, this evening, the Reserve Bank of Australia releases its interest rate decision. They're expected to leave cash rate target unchanged at 2.5%. Looking ahead for the week, since it's Monday, as to how our calendar's shaping up. Tomorrow we have U.S. Factory orders, IBD tip economic optimism, and then we have Fed's Bullard and Kosher Lakota speaking. On Wednesday, we have European Services PMI, US ADP, which is the payroll company, and a US Services PMI coming out along with crude oil. On Thursday, we have the Bank of England rate decision, initial claims, trade balance, and Fed's Rosengren. On Friday we have the second key number for the month, which is the U.S. non-farm payroll and unemployment rate. Now that Baker Hughes is on the radar, I've listed it here. Baker Hughes rig count on Friday, consumer credit, and Fed's Lockhart. That's what I have for the basic news. Let's look at the charts. So a couple of interesting things to note from Friday's action. Essentially what we've done here is Wednesday we sold off pretty good, had a really wide-ranging day, and then just as we expected on Thursday we had a bounce and a balance, and essentially this area here is creating a local composite type of situation. Let me get rid of the bigger composite here. Okay, so you can see what's happening locally. So what we did is we crossed. So we're dealing with basically a three-pronged balance zone since the all-time high at 2088.75 and a week high. And what we did on Wednesday is we moved from the cutoff point of the middle to upper distribution and went all the way down through the lower distribution. And then the next day we went back to 2018.50, which is the point of control, even before I moved this composite. And then on Friday we opened, could not quite get to 2018.50, and then we sold off later in the session. So we opened, we pushed up, and then we ended up putting in new lows. But overall, we didn't really do anything of significance on Friday's market struggles to build the energy it takes for the next move. By all accounts, from Wednesday onwards, it looks like the move is likely to be down. We have multiple bottoms here, 84 and a quarter, 81 quarter, 81 quarter, and 82, creating what looks like a triple bottom locally, although the volume is tapering quite nicely, and this could be an inverted head and shoulder formation. Left shoulder, head right here, right shoulder, and then the neckline would be our key 2060 level that I've been talking about for a few weeks, and then targets for this are basically 2,120 or so is where it's expected to go as a target. But in any case, there's nothing new here. That's the issue for us. There's nothing new going on in the overnight session. Nothing happened. The market was sideways. We have a very heavy profile on kurtosis or fatness, with the market just being stuck here. So we tested lower as a continuation of Friday's impulsive move down. We still have not resolved this impulsive move on the day session. We'll see if we can this morning. Looks strongish. There's no value here, even though the charting software is showing us value as this dark gray here. There's really no value when you have this elongated, stretched profile, because the market is, by definition, seeking value as it drops. And even though it moved the point of control to the low end, there's really no value here. Note that the value low, supposed value low, is that key 87.75 number, which is what we tested on Friday again. So overall, not much to glean from Friday's action, except that the market's struggling to find balance. And so this morning, there's not much to say other than to just expect a fair amount of chop, expect 88.50 to be tested, and I also expect a lower low by at least a few ticks on Friday's low. at some point in the session, but we'll see. It's very close to the overnight high, and overall it's in value. So I expect it to be a very choppy morning. There's not much that's driving us this morning. We do have construction spending and ISM manufacturing, but really not sure what to expect overall. If I had to go with what's going on here, given the fact that we are in a balance mode after the Wednesday sell-off, and we did get that extension down on Wednesday to complete that impulsive move with a continuation move here. Overall, with balance, anything could happen. I do want to see my preference, or my primary idea, my preference for a better trade, not that the market cares, is for it to find some initiative buying initially into the 2000, 2001 area, and then sellers step back in at 2001 and start to sell it down, and then we could finally catch this 1980 and then potentially push lower into levels that are much lower than that. The next key level down, I do have a minor composite LVN at 73.25, but the next key area is 56.75 or 56.25 down here. And that puts us way out of range, puts us 40 points away. But still, I'm looking for this to kind of attempt to go higher, fail, and then start to test lower and complete this selling that was cut off by the end of the session on Friday. There's no clear, on most days, I feel that with the information that I have, I could lean on one hypothesis over another. With today's setup, I cannot be confident with the primary hypothesis as being the much better probability play. In that situation, I just wait and watch. I'm going to wait for the market number to come around, show us where it's at, and what the reaction is. I have to wait and see who's dominating the trade early, and then go from there. So even though my primary hypothesis is for a test of the overnight high, failure, seeking sellers, failure for buyers to continue, sellers step in, and then for it to test the 88.50, as well as Friday's close at 91.25, then 88.50, and I expect it to make a lower low. That's my primary hypothesis if I was following normal auction theory, and the expectation for what this auction is going to do. Friday was ridiculous when it came to crude oil. You can see here, this is my underlying sectors chart. This is a chart that plots the percent change from the time the market opens, the Wall Street opens, and it gives me an idea of what's happening in the underlying markets. An important chart for me. It continuously stays open, and you can see here that oil had a couple of early bounces to up 1.8, 1.9%, pulls back to almost zero, and then it just took off and got as high as almost 8% on the day, 8% on the day, before settling down at 6.59% to close as a change for the day. Pretty insane movement there. If we look at it on this chart, this is my trigger. Let's look at it on a 15-minute. You could see here the move on Friday and where it is relative to everything else. Just sideways. We had a nice pop up on Thursday, and then Friday was pretty much sideways. Seemed like a quiet day, and then boom, explosive move up. It did close at 49.2 level that I've been targeting now for a couple weeks. Remember, for those of you watching these Trader Bites and looking at my expectations for crude, I had said that it looks like it was forming balance, and it ended up slipping below. But this whole time, my initial target, my target has been 49.2, and then my hypothesis for crude over the last week has been that it would push back up and then stick around the 47 to 49 for a little bit to build some balance, to build some energy for the next move up. Crude has a lot of damage control to do, or damage or repair to do to the upside. As you can see here, there's just been some very directional trading, a very directional auction so far. So there's plenty to do above, but definitely Friday's move has torn a few heads off. And then the Euro Stoxx, the last thing I'm going to talk about today. Euro Stoxx completely in balance, remaining in this composite zone. Again, 3370 is a key figure above, was tested early this morning. 3373 is the high and is holding steady. It's kind of holding steady with the euro. The euro, after selling off and down into the 111 handle, has found its groove in the 113 handle, and you can see here that it's come back and it's completely in balance, and the balance price for the euro is 113.17. It's just been sitting here, and I expect that it's likely to sit here for a little bit, at least until Thursday's rate decision by the Bank of England and Friday's NFP release. That's my time. I'm over by 3 minutes, but it is a Monday. Goes a little bit longer. Good luck. I want to remind you again to set your goals for the week. You know, just having no target causes people to overtrade, in my opinion, in my experience trading prop traders. It's better to have a target and to really aim for that target. It helps you filter bad trades, impulsive trades. It helps keep your emotions in check as you pick out the trades that have meaning and serve your goal, as opposed to coming in and saying, well, I'll just do the best I can. And you're really not aiming for anything. It's just really important for you to stop for a minute and just figure out where you've been for the last few weeks, what your next target is going to be, what you're aiming for, what areas you need to correct. I would strongly suggest you track your errors. Errors are very, very costly. They're kind of like inflation. They nibble away at the value of your account. So keep track of your errors and aim to cut those down as well. If they're fear of missing out errors, execution errors, not letting the trades play out errors, all of those errors are killers. And they degrade your performance. So it's important to identify these things first, identify where you are performance-wise using expectancy and ticks rather than dollars. Don't use dollars to measure your performance, in my opinion. Identify your errors, and once those are identified in the form of a journal or whatever, I would go ahead and set goals to eliminate them piece by piece. You cannot change a lot in one go and expect good results, but it's kind of like being on a weight plan or an exercise plan. Make a small change every day or every once in a while, and it goes a long way towards helping you achieve that goal. Good luck, keep your risk in check, and I'll talk to you tomorrow. Take care.